Hi everyone, I'm Daniel, and today we're talking with Clive Massey from Atomic Minerals, ticker symbol ATOM on the TSX-V. We're going to be talking about uranium, why the uranium sector matters, and what got Clive into this space. Clive, it's great to have you. I've been looking forward to this conversation for a while. We've all seen the sudden rush of uranium companies, you can say, a lot of people taking advantage of the rise in prices. But what is actually going on in the space? Why are so many investors looking at uranium as an opportunity? And what changed in the past little while?
Well, first of all, Daniel, I'd like to say thank you very much for having me. There are a variety of things that have taken place over the last couple of years. And I think probably the most important thing relating to the investment industry, that the price of uranium has gone from approximately $37 24 months ago, 24 to 28 months ago, to 109 recently. Since then, it's retraced slightly, and it's strengthening again, and I believe it's going to go significantly higher. And the reason for that, what's driving the demand, is that uranium is recognized as being a very cost-effective and green method of developing energy. And as the political powers that be around the globe continue to implement different guidelines and regulations in relation to phasing out internal combustion engines, and other electrical devices, and turning more toward electricity, the ability to develop that energy, really the only sensible solution is nuclear power. And so in relation to the price, there's an 83 million pound shortfall at the moment. There are 69 nuclear power facilities that have come online since 2013. There are 450 nuclear power plants that are either in the planning phase, construction phase, or the permitting phase. And for example, in 2021, we used 17 million terawatts of power in North America. If we're to meet the emission guidelines of 2050, we will need 71 million terawatts of power. And so to do that, the only way to do that is through nuclear power, adopting nuclear power.
Interesting. So this increase in demand, especially, is coming more from going electric, right? More and more. Like my neighbor just the other day, he had to redo his entire connection to the city power line because he has 2 electric cars, and the old power line just couldn't handle it. So the demand is definitely going up. But why is nuclear so much more effective than the other forms? Like, why? Nuclear power has been around for a long time, right? And we had the issues that came up in the past with safety around nuclear power. So what's changed now?
Well, if you look at it from this perspective, first of all, if those engineers at Chernobyl had read the manual correctly, they would have known that if you dewater the rods, they will explode. And that's what happened. 3 Mile Island was a let-off of a release of some radioactive steam. It was really a media event, not a nuclear event. And, Fukushima, I mean, who can predict tidal waves or earthquakes? But it doesn't make good sense to me to build a nuclear facility on the edge of tidewater. So in relation to individual power plants creating energy, in the oil and gas industry during the period of a year, there's roughly 120 deaths in the industry. In the nuclear power industry, there's essentially, I think the statistic is 0.1 deaths on an annual basis. So when you consider the safety of nuclear energy compared to the fossil fuel industry and how many coal mines cave in during a year, it is so far above the others. There's just no questioning it in my mind.
Interesting. Yeah. So safety has always been there then. It's just kind of been more exaggerated by some poor choices.
I think the mass media has exaggerated some of the things which have transpired in the nuclear industry. And then, of course, the Fukushima incident led to a number of companies putting their nuclear power programs on hold. And for example, Germany and Sweden and Norway have re-embraced nuclear power, and so has France, by the way. So there's definitely been a change in sentiment in that respect, and people are realizing more and more that it's the only sensible alternative.
It's interesting that you mentioned Germany and those countries because they used to rely on Russia for their energy. Isn't that true? Like they
for their oil and gas than for their nuclear power. But that being said, this is also one of the contributing factors with the geopolitical climate in Europe at the moment. It's affected the price of uranium as well. It's affected uranium supply. 40% of it comes from Kazakhstan. And as a result of what's going on in Ukraine, that's hampered that supply line. So that has aided in driving the price up. But when you consider, as I mentioned earlier, 450 more nuclear power plants coming online, the price is going higher. And if you adjust it for inflation from what it was in 2000, its high in 2007, which was $140 a pound, I think it's going to $240. If you adjust it for inflation, that's $200 today. So we're going to see significantly higher prices. We're going to have to find more uranium to meet the demand. It's the way of the future.
and it's looks like it's going to last, right? Because
I think it's as long as people continue to embrace electric cars and political leaders like Gavin Newsom outlaw the ability to use gas-powered lawnmowers, weed eaters, or hedge trimmers, there's going to be a looming power shortage, the likes of which nobody has ever imagined if we don't embrace it now.
very interesting. Okay. So there's a lot of things that are contributing to this trend. And it sounds like it's, fundamental infrastructure issues with sourcing uranium and also just the lack of power plants that existed because of things that have occurred. But if we want to hit carbon neutrality, that's going to be the way that folks have to go. So the uranium space in general is growing, right? And there's a lot of folks that have been entering it. What made you get into uranium? I know you did copper before, so you've been in, renewable power for a little while, but why did you switch over to uranium?
Well, having previously been in it and had a fairly successful company in the uranium sector previously, with the same, essentially the same team of people as well as the same partner, when I saw that uranium prices were rising and continuing to rise, and when I looked globally at what was happening with the embracing of electrical power in relation to electric cars and other devices, I realized that it was only going to be a matter of time till it went higher. And we have an extremely strong technical team who had outlined a number of potential exploration targets previously. So I thought it was time to start another uranium company, found another uranium company, and start picking up some of those assets, which is essentially what we've done.
So were any of these assets things that you had looked at in the last cycle?
They were. Some of them were things that I actually owned in my previous uranium company.
No way. Okay. Nice. And what happened to that one?
We funded that company at $11 uranium, and at $140 uranium, we had a new discovery, the only new discovery in the last uranium run-up, in the Central Labrador Mineral Belt in Labrador. And the day we made the discovery, the stock traded 9 million shares and went from 70 cents to $3.75. And we only owned 51% of that project. We were the other company, Silver Spruce, was the operator. And so we structured a deal to sell Silver Spruce back their 51% interest for 150 times our original investment, which was $1 million. So it was a $150 million deal. Unfortunately, it was in late 2007, and the Fannie Mae and Freddie Mac credit crisis came into play. And as you may remember, the markets essentially imploded and the deal came unraveled. But I think the important part of the story is that we know how to find uranium. We've got a technical team that knows how to find uranium. We've got a management team that's done it before as well. And we know how to structure deals and make money for our shareholders. And regardless of the fact that the the deal fell through in the end. In the meantime, taking the stock from 25 cents to 3.75, there were a lot of investors that made a lot of money.
Yeah, I bet it's a pretty good multiple right there. Very interesting. And you've been in mining for a while now?
I've been in industry now for 33 years, and I have worked at just about every possible position you can think of, other than being the head engineer or the CFO or the chief geologist. And I've raised north of $100 million for a variety of different projects. I have seen projects through to production. Really, the goal of Atomic Minerals is to develop some resources and sell them off to the highest bidder. When we put the Lisbon Valley Copper Mine into production in the 90s, it took almost 10 years from the time of discovery to the time of production, and it was absolutely brain damage. And so for our investors, we see the fastest path to profits through a sale of an asset, not down the long and painful road of production.
But you've been down that road.
I've been down it, and I'm not going down it again.
Fair enough. Yeah, I think when you find a model that works, you don't need to make the same mistakes twice.
Exactly.
So no, that makes a lot of sense. So that's interesting. So, what's going on with Atomic these days? Like, you guys started, you're a fairly new company, right? When did you guys start again?
We came to trade under the symbol ATOM roughly 2 years ago.
2 years
founded
ago.
the company. And at that time, we had identified a number of geological, they're salt wash anticlines is what they are. And I'll come back to that if you like. But, where are we going to find more uranium? In areas which are similar to those that have provided discoveries in the past. So we staked, and that was the Lisbon Valley anticline, produced 82 million pounds of uranium during the 1950s, 60s, and 70s. And so we have staked a number of other salt wash anticlines on the Colorado Plateau, which have the same geological structure as that of Lisbon Valley. So we believe that the most likely place to find more uranium is on a salt wash anticline that's geologically the same as Lisbon Valley. So we based all our staking on that. With that, we staked 3 anticlines: the Dolores, the 10 Mile, and the Hearts Point. And we partnered with Kraken Energy at Hearts Point. Kraken Energy has drilled 2 holes to date. The holes which they drilled didn't hit the mother lode, but they did confirm our geological theory that the presence of uranium is there at Hearts Point. And previously, we had only ever looked at oil well data because salt wash anticlines are not only good for the deposition of uranium, but they're also good for the deposition of oil and gas. So on the Colorado Plateau, there's been hundreds of drill holes drilled by oil and gas companies like ConocoPhillips, Mobil, Shell, Exxon. And we were able to look at the drill logs for these companies, and we found all of our staking was based on drill holes which we found which had ore grade intersections of uranium in them. So all our drilling in the future will be based on that data, which is what we modeled our Hearts Point drilling program on.
So at Hearts Point, you had drill holes that were already done by ExxonMobil and these other oil and gas giants because they were looking for their own stuff. And in that data, you had data about uranium, potential uranium intersects. So that's how you.
How we established our targets at Hearts Point.
So you were essentially able to do like a mapping with their drill holes.
Yeah, we looked at their data, and for example, in the 3 drill holes at Hearts Point, at the same elevation, in each drill hole, there's about an 11 to 14 meter intersection, which provides off-scale radioactivity, which indicates the presence of a uranium ore body. So we targeted our drilling based on that. Now, the unfortunate thing about drilling uranium is you can be 4 feet away from a uranium ore body and miss it and have no indication. And in this particular instance, we had the same radioactive trash that's generally seen in ore grade holes, and we also intersected, as I said, off-scale radioactivity. We just didn't intersect the ore body. So we're designing another drill program, and I would expect we'll be back drilling sometime in early August.
you guys have had these drill holes. You've had some good news coming out of Hart's Point. What else do you have in the works?
Well, we've got the 10-mile anticline, and the staking there was based on oil and gas data as well. So it's currently going through the permitting phase. And that project is also in Utah. And then we also have the Dolores anticline, which is in the southwestern corner of Colorado. And the favorable sandstone unit, which has provided all the uranium discoveries in the past, most of the uranium, let me rephrase that. The highest grade uranium discoveries is the Mossback member of the Shinli. And so there we see the Mossback member of the Shinli again in oil and gas holes. The Dolores anticline is also bisected by the San Juan Dolores River. And where it's bisected, you can actually see the favorable sandstone unit sticking right out of the cliff. And the Bull Snake mine was in production there during the 1960s, and they produced about 60,000 tons. So we know there's uranium there. We've seen it in the sandstone units themselves where they outcrop, and we also see it at depth in oil and gas holes. So we're permitting that project as well. But aside from the projects we have on the Colorado Plateau, Daniel, we also have 9 projects in the Athabasca Basin, 3 of which we're focusing our exploration efforts on. Looking forward, they're going through the permitting stage, and we expect to be drilling these projects as well in the not too distant future.
Very interesting. So you've got Colorado. What made you step into the Athabasca Basin?
Well, there's been lots and lots of money spent there, and there's been lots of discoveries made over the years. And essentially, I was always of the opinion that most of the easy stuff had been found. And with this package of projects, it just essentially dropped in my lap. And 2 of these targets one is Rabbit Lake, and it's entirely surrounded by Cameco. And it's only about 600 meters from their 5 million pound deposit. So we can see by looking at geology that the conductors go right across our ground. And then one of our other projects, it's entirely surrounded by Cameco on one side and UEC on the other. And we're very excited about that because, as we know, mineral deposits don't know anything about claim boundaries. So just as a claim boundary there doesn't mean that the conductors and the mineralization doesn't extend onto our ground. So we're very excited about that. And then our Bleasdale Lake project, currently the resource there is 620,000 pounds, and we see an opportunity to expand that. There's an average grade there of 0.12. So it's a little grade challenged, but we see an opportunity to expand the size and also the grade.
Okay, interesting. So you've got 9 new claims. You've got Colorado that's shown some promise. I'd love to dive more into the company. I think we'll have to come back and go and do a follow-up in a month or so here. But I am also curious on when it comes to this kind of company. A lot of folks might be familiar with a SaaS business model where revenue grows, and that's an identifier of progress. What is the metric for progress in a exploration mining company?
Well, really, there are many examples in the mining industry, but probably the most recent one that took place was the discovery of the Rough Rider deposit in the Athabasca Basin, and that was interestingly something that we looked at in 2005 or 6, and we passed on it. And of course, the guys who ran Hathor Minerals at the time picked it up, developed it to the point of being a bona fide discovery, and sold it off to Areva. And I apologize that I can't remember precisely the value of the deal, but it was in the hundreds of millions of dollars anyway. And the investors in the company did extremely well.
When was this? Roughly.
I'm going to say it was sometime in 2008 or 9. I can't remember precisely off the top of my head. I'd have to Google it.
But sometime in that town.
It's fairly recent.
Yeah.
And then, of course, in the copper business and in the gold business, there's been many examples. You know, you look at the discovery of SK Creek, the net smelter royalty for the two fellows who discovered it, who I just coincidentally happen to know personally. They sold their net smelter royalty to Homestake for $600 million. So they made a lot of money.
Wow.
So the model here is to discover a bona fide uranium ore body and sell it to the highest bidder. That's the model.
And then along that process, are there certain things that could occur that would signify to the market that this is going in the right direction? Like, for example, you know, drawing a parallel to, again, like tech companies, you know, you have like X number of clients signed on in a certain time period within a year. In mining exploration, would that be something along the lines of a drill hole or a resource that would show that this is going in the right direction and will cause excitement?
Yeah, subsequent drill holes, all intersecting ore grade uranium, would obviously indicate that you know, we're on the right path. But sometimes it takes a lot of drill holes to find those ore bodies. In the case of Hemlo, I think it was drill hole number 98 that finally made it a bona fide discovery. But in the case of SK Creek, it was one single drill hole that made the discovery because it had the highest head grade of any gold mine ever discovered at the time of its discovery. So the same thing with some of the discoveries that have been made in the Athabasca Basin. They've been very high grade. So all these things combined signify to the market that we are advancing our exploration model.
So would you say that if you were to take a look at, like, for example, SK Creek's chart or something, you would have a spike when the discovery is made and then another spike when it's sold? Or
yes, because typically what happens in the exploration industry is you get an increasing share price as excitement builds, as you're building toward the drill program. And if the drill program's not successful, well, that's generally the end of it. But if the drill program is successful, then you generally get, again, an escalating share price. Then once a production decision is made, then the stock usually retracts and you have essentially a flat line till the time of production. So really, you know, people who are making investments in the junior mining sector, you know, ideally, in my view, should be looking for companies which are trading at relatively low prices, that have good projects, good technical team, have a high likelihood of making a discovery. And once that discovery is made and the share price takes its initial run, that's the time to exit those companies and look for the next one that's going to make a discovery.
Very interesting. Well, thank you so much, Clive. It was great talking to you
My
today.
pleasure. Thanks very much for taking the time to talk to me, Daniel. I really appreciate it.